Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a smashing week so far. Today we're going to do something different. We're going to be taking a macro viewpoint or view of the crypto space, and we're going to be asking and answering the question, are we in a bear market? You know, what do I think is likely going to happen to the crypto space? Because there's a lot of uncertainty taking place right now. Lots of people calling for a bear market. People like myself calling for continuation of the bull market. We're going to get into it all in this video. I mean, what are we even calling a bear market nowadays? How are people defining a bear market? Now, I define a bear market as what we've typically seen for Bitcoin at the end of its kind of blow off top, which is a 2-year period of downward price action before the cycle sort of rinses and repeats. And this is typically, these cycles, if you see these green lines, have been formed based on the halvenings. This is where the halvenings take place, these green vertical lines. And essentially after that, the price, there's a supply and demand shock with the rewards in Bitcoin getting cut in half, and markets need to adjust accordingly. Now, where does Cardano sit with all this? So what we're going to do, I'll break down the video for you very quickly. We're going to be looking at a sort of macro view of everything. We're going to be going over Bitcoin and its kind of history. Why do we use Bitcoin? Well, the entire market follows Bitcoin. This is Bitcoin, and this is the total money within crypto. The charts are virtually identical, and even when you take Bitcoin out of the cryptocurrency market, it still largely follows its movement. So the market is still very tethered to Bitcoin. This is a trend that we're seeing continue to, it's becoming less and less correlated as we see Bitcoin dominance waning over time. However, still in the situation that we're in, the position that we're in, Bitcoin is really what captures a lot of the large investments. Certainly, it's the one that you're seeing corporations and so on and so forth go towards, and it's still the tide that rises and sinks all ships. So we're going to really be focusing on Bitcoin. We are going to relate it to Cardano. Very interesting. I was looking at this earlier. Isn't it interesting how 2017's sort of high weekly candle close, we've actually held a support and not closed above since sort of February last year. So I would argue that this is quite a lot of consolidation. And the longer the consolidation, the longer the move to the upside, the bigger the move to the upside. So we'll talk about Cardano relative to everything. But really, I just want to start by taking a look at the kind of landscape that we've got. Lots of uncertainty. It's been since March 2020 was the most significant event potentially in Bitcoin's history, other than the Genesis block and other than, of course, what happens every 4 years with the halvening. Because this caused a hugely inflationary event, and in fact allowed Bitcoin to shine at what it was designed to do, and that's store value against the dollar. Since then, we've had a cool off. We've had so much happening. For example, here, people don't understand just how much China has played out in this chart, because this sell-off had a lot to do with China and then banning Bitcoin miners. And then, of course, over here, we've seen a lot of nonsense with them sort of coming out and banning their citizens from holding it and so on and so forth. There's been a lot take place within the past sort of 2 years. And we're going to sort of incorporate that into what we're talking about today, because the reason we're going to bring that up is because I actually think from where we came, where the Bitcoin 4-year cycle theory and your halvenings really moved the market on their own, the fundamentals in the crypto space aren't just going to move themselves, and there's going to be market participants who have far more of an impact. And I think we've seen that over the past 2 years. So what I want to do is start off by talking about the Bitcoin 4-year cycle theory. This is something that I've followed for nearly 4 years. It's allowed me to have great success within the crypto space. And it's some of the first stuff that we started talking about on my channel. This is a video from me over a year ago now, back in 2020, where we were essentially anticipating the 4-year cycle theory to play out again. And you can see it's the exact same chart that I used back then. We've just added some sort of labels onto it. You can see via this video, we hadn't actually gone into what is typically your sort of blow off top year. So every 4 years there's a halvening. The halvening takes place where these vertical lines are. And then the price of Bitcoin has to adjust in order to accommodate the Bitcoin miners. That's what we typically see. Now we're going to bring this up because this is all going to relate to what we're going to try and hopefully ask and answer. And that is, are we in a bear market? And there's a number of data points. We're going to bring this. We love to bring this chart up. Those of you that watch my daily market updates will know that we really like to bring this chart up. This is from the Root. And this shows short-term hodlers. We've kind of, a lot of the metrics that typically signal bottoms in terms of bear market bottoms previously are flashing at where we currently are. And there's a lot of bullish on-chain data, but that isn't really correlating and going through to markets, given all the kind of pressures that it's under. But we'll talk about it all. So Bitcoin's been following this sort of 4-year cycle theory. And back here, we were anticipating it to kind of start off in a similar, or 2021 to be similar to 2017 or prior to that 2013, which is where you have this blow off top. And it started the year out very much so. And that's why we had because we had sort of started it in that fashion, we were expecting it to end in a similar one because it followed it really very perfectly. Now, that obviously didn't happen. There's a number of reasons why perhaps we didn't see that sort of price appreciation, lots of altcoins, money getting sort of spread around, and of course, the sort of downdraft that the crypto space has largely faced all plays a role within the past, or 2021. And 2021, quite literally, has just gone sideways. So could this be what your new bear market sort of look like? And we're going to talk about that because I don't think we're in a bear market of a traditional sense. And that's important to distinguish. What are we calling a bear market? Well, for me, I would call, if this is Bitcoin's life history since 2010, Bitcoin only came out 2 years ago. Remember, Cardano only came out in 2017. It's done very well since then. You can really see, this is what I would call your bear markets. These sort of 2-year pullbacks after the blow tops. That's a traditional bear market for me in crypto. I don't think that that's going to be the case anymore. I don't think we even see that price action necessarily anymore. I think we've moved away from being very tethered to the fundamentals that Bitcoin has and it moving the market to us being now more inclusive to your sort of traditional institutional investors, and they're going to play a role within it. And we're seeing that today. We have kind of invalidated the 4-year cycle theory potentially. Some people say we validated in it our way, but we're moving away to something else. There's plenty of other theories out there. Like you can see the bar patterns I've got here are your previous cycles that I've overlaid on the current one. Lots to suggest as previous cycles. The length between bottom to top has got a lot, or top to top has got a lot less. It's got smaller, it's lengthened. So you can see this cycle here took less time than this one, and here, and then the one that we're currently in, people are suggesting is going to do, it's going to lengthen again. So there's lots of theories going around, but let's focus on where we are right now. So Bitcoin's at this kind of consolidation point, if you will. It's really gone sideways for an entire year. January last year, January, the 9th of January, we were at similar points to where we are now. So for an entire year, potentially we've gone sideways. You'd essentially, if you bought the hen, you'd be none in the profit or in the losses. You'd be minus your trading fees. So what happens now? Well, some people are calling for us to go down to 30K to 20K. I don't think that that's the case. And I think there's a lot of metrics to suggest that that isn't going to be the case. One of them, for example, that I really like to bring up is the short-term hodlers. Or short-term holders. They're not hodlers necessarily. Now, every top of the bull market has been determined by short-term hodlers, an increase in short-term hodlers. There's been a local top in short-term holders that has perfectly coincided. You can see here in 2017 and prior here in 2013. The tops, this is where you've had the most short-term hodlers. The most short-term hodlers. And again with 2013. The top is always typically signaled with short-term hodlers being at an all-time high. And the bottoms, vice versa to that, usually signaled with long-term hodlers being the biggest holders. And actually short-term hodlers being at a low. That's where we are today, ladies and gentlemen. I hope you can see that. My head isn't in the way. This is just one of a few metrics. There's lots of very bullish on-chain metrics that surround this. This is the root sort of making sense of it again. You can see your long-term hodlers. They shift to the short-term hodlers, which is the top, and then the cycles kind of rinse and repeat. And that has a lot to do with this 4-year cycle theory as well. A lot of the largest holders actually are, a lot of the largest holders are, and sellers are Bitcoin miners, which ties in with why, price has to adjust. Its supply and demand takes place with the halving, cutting the Bitcoin rewards in half, and then it has to sort of adjust accordingly. So I hope you guys are following where I'm at right now. So what am I calling for now? So first of all, let me just establish the fact that I don't think we're in a bear market in a traditional sense. Could these be periods like this the new bear markets? Could this be the new sort of bear market? Potentially. Could this have been a bear market? Potentially. But when I say bear market, I'm talking about a traditional bear market, what we've previously seen. And I don't think we're in one of those. I also don't think the signs that we're entering one are there. And I think that has quite a few people worried. I think crypto takes more of an Amazon-esque take on things. This is Amazon in the 1990s. And you can see it did a similar thing to what Bitcoin did in 2017. The charts are similar. We've always compared Amazon with Bitcoin. And ultimately, I think you're at a similar point, or you're going to see similar adoption to what Amazon did, where these kind of big boom and bust cycles where you draw down 93% in a very harsh manner, or 95% I think it was for Amazon, are now eradicated. And yet your bear markets for the likes of this are more short and sweet and snappy, something like that. And in actual fact, where we are now, I think is very comparable to Amazon in 2010. And I think that you could play out in a similar sort of thing to what happened over here. In 2008, you had a huge catastrophic event, which was, of course, the housing bubble that was a no-brainer that it was going to crash. Or certainly, I was too young to really be involved in markets back then. But Michael Burry called that beautifully. This was a huge inflationary event. Like Bitcoin went in March 2020, that caused governments to have to print and bail out. Similar thing to what took place here. Took place over here. And then, round about here, they started to threaten to up interest rates. And you saw the market do this. You saw this double top. You saw people become very bearish, only for it to go on continuing. And the reason it went on continuing is because the adoption continued and so on and so forth. We've spoken about this previously. What this is showing is the internet and how long it took to get adopted and its rate or path of adoption. Crypto, in my opinion, is on a similar journey in which it's early on. That's why I'm so bullish on crypto. And I think the market as a whole, this entire chart, even today, and we're seeing more adoption now than we ever previously have, is really mapping out Bitcoin's adoption from no users to the amount that it's got today. That's something to keep your eye on, ladies and gentlemen. And that's why I'm not bearish in the slightest. In fact, I'm a perma bull almost on crypto, because I think given where we are as a space currently at $1.8 trillion, we have an awfully long way to go. I think, you know, if this technology really does something akin to the internet and we see the sort of similar adoption, just think of where that market cap is going to be. It's going to be a lot higher. And I would argue that there's a few things taking place also that make me think that this isn't a bear market, or this isn't the precursor for our traditional sort of style of bear market. We know that there's a lot of whales right now actually accumulating. This is coins moving to and from whale holders, and you can see it's moving to them. And this was from Willy Woo a few days ago. That's still largely the case. We still see the largest Bitcoin wallets continue to accumulate on these pullbacks. We see the likes of Binance hoarding Bitcoin, a number of other institutions hoarding Bitcoin. It's all relative to where we are. Why would they be doing that? Some of the people most in the know within the crypto space, if they were anticipating this sort of traditional bear market to follow, and for us to play out in a kind of 4-year cycle theory all over again. But we didn't finish in a kind of 4-year cycle theory. That's where we had, people often say, all in crypto, you said, you know, $7.50 for Cardano, you could see it getting there. I still do see it getting there. I just think we've taken a different route to get to the same destination. And I think, you know, that prediction by the end of year, and we've always said end of year, end of cycle, by the way, people forget about the end of cycle thing. What are we now on a different cycle? We've sort of not really validated the 4-year cycle, but are we still on the cycle in terms of the lengthening cycle theory, which sees cycle lengthen every year, or every cycle, I should say. So there's lots going on, but my ultimate, it's important for me to stress my overarching view is that I don't think we're in a bear market in a traditional sense. Now, does that mean that what Bitcoin's essentially gone through for the past year, where we could have had 2 potential bear markets? Bear market is just really, a bear market is defined by basically downward trending price action over a sustained period of time. That's all a bear market is. Vice versa, bull market is upward trending price action over a sustained period of time. You know, what is that period of time? Is Let's do that again. 100 days, that period of time. Are we calling that a bear market? And if we call that a bear market, well, we could call this a bear market. You know, what are the bear markets now going to look like? And like I say, I think Amazon is a great sort of roadmap of potentially the journey that crypto's on. Certainly, this validates us potentially following, you know, the internet in terms of adoption. So just some food for thought. I didn't want this to be too long of a video. We've really focused on Bitcoin because, of course, again, this is the total money within the crypto space. This is the total money take out Bitcoin. It's following Bitcoin. Bitcoin isn't following the altcoins. The altcoins are following Bitcoin. Where does Cardano sit in all this? Well, very interesting. If this is really the floor, and there's been a number of things to suggest that it potentially could be, like the fact that we haven't broken it today. It's also the prior 2017 high. Where's the ceiling? You know, what happens if this market continues to get a real uptick? This market can change on a dime, by the way, ladies and gentlemen. I mean, it really can. We can go from being bearish and the sentiment not so great to being bullish again, just like we did over here. It doesn't take long at all. So that is probably just some food for thought for you all. Let me know if you guys want more of these videos where we don't really go into anything too specific. We just cover the general market as a whole. I'm not worried in the slightest. In fact, my money's where my mouth is on this. I'm still holding my portfolio. And believe me when I say it was a lot easier for me to hold back here than it is currently where I am right now. Ultimately, the reasons for me holding is because I believe in this space, I believe in this technology, and I believe in the way that it's going. And I think we have a very bright future despite the short-term price action being choppy. And remember, any emerging market sees choppy price action. People think crypto's in a bubble and that it's, you know, this, that, and the other. The dot-com boom back in the 1990s, guys, 1999, got to $5.5 trillion. Crypto has only seen $3 trillion, and that was in 1999. $5.5 trillion in 1999, probably worth $20 trillion today. You know, this space has got a long way to go. I'm going to love and leave you on that note. If you've enjoyed the content, a like is always appreciated. So is a comment, and I'll catch you all in the next YouTube video. Thank you very much for watching, ladies and gents.